I think the biggest theme of everything that kind of came out of the decision as well as the press conference to follow is that they're really suggesting that the economy is slowing and that inflation is picking up. Good afternoon. So we had a disappointing consumer sentiment and retail sales numbers ahead of the Fed meeting here just yesterday. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a bit of the noise along the way. What I will share is that a huge majority of our time is going to be around the Fed meeting, although I had hoped that the Fed was kind of like, stepping into the background a little bit. That's not necessarily the case after yesterday. So we will spend quite a bit of time on the Fed, and then we'll skip the question of the week here this week since we have so much to cover, because we also have an event here this evening to kind of drill in on some things. So let's start off with some of the data first, and then we'll talk about the Fed meeting from yesterday. So Friday, we had consumer sentiment, and then Monday, we had retail sales. And the short version of this is both were below expectations. So consumer sentiment was down pretty significantly, which will tie into a lot of the Fed kind of press conference and follow up here in a minute. But then retail sales came out on Monday. They were still up 0.2% versus expectations of 0.6%. And remember, for some context, this is off the back of the January sales number, which was down 1.2%, I believe it was, after all the holiday shopping in December. So I think that helps kind of paint a picture of these numbers. When we're talking about percentages up or down, obviously the last, kind of data point does matter. So hopefully that puts that in context a little bit. But of course, the biggest thing was the Fed decision and the press conference from yesterday. I don't think it's any surprise at all, but they left rates unchanged for the time being. There's been a lot of talk about, rates being cut now for the year, but for what it's worth, I don't think really anybody expected a rate cut for this particular meeting. Now, what I will share is that the general takeaway from the meeting and the press conference is now possibly 50 basis points, 25, 50 basis points by the end of the year. A big thing to mention is that they are slowing the balance sheet runoff. So dropping from 25 billion to 5 billion a month on the balance sheet runoff that they've been doing. And I think the biggest theme of everything that kind of came out of the decision as well as the press conference to follow is that they're really suggesting that the economy is slowing and that inflation is picking up. They marked down their growth expectations. They marked up their inflation expectations. So the big question, of course, is what does this sound like? Slower growth, higher inflation. Well, the term stagflation came into the mix, right? And I will share, I want to really share some caution around this because I think it's way too early to say this. Stagflation, I think, is now the new buzzword and may be, if this continues to be the theme that we hear from the Fed. And keep in mind, as I share caution around this, I'm sharing this remembering that we've been warning of this for a while. So we've been talking about this potential that could come down the pike. But even still, I will say that one Fed meeting as a signal that this is happening, is not something to write home about. Inflation is still not super high. It's higher, right, than 2% for sure, but it's not, we're not talking, 8, 9%, anything around those lines where we were, always back there. And so far, we haven't seen the slower growth. So just know that, obviously, if this kind of trade-off does occur, then sure, stagflation is something to be aware of. But stagflation at a 3% inflation rate is also not really something to be too concerned about. So it'll be important to watch, but again, take this with a grain of salt. And this is coming from somebody who kind of warned that this could be a potential challenge from a little ways back. But I just want to mention that don't feel like this is a panic situation here. I think it's interesting because a lot of what came out of the Fed was like surveys suggest that inflation is going to go higher. They actually mentioned the base case is that inflation will be transitory. Does that term sound familiar to you? You might remember that's kind of a throwback from a couple of years ago, basically, when inflation started picking up and they thought it was just going to go away. So it's funny, like it feels like from the Fed press conference yesterday that honestly there's almost like this following the headlines as opposed to actually looking at the data objectively, which is, obviously not what the Fed should be doing, but we'll have to continue to watch that. And obviously, it feeds into everything else we've been seeing over the last couple of weeks. But nonetheless, get ready, because I think stagflation may be the new buzzword after yesterday's press conference. And again, it is important to watch, but don't take one Fed meeting as the signal that is what's on the horizon. But hopefully that helps for kind of a quick scoreboard after all this is said and done. As a result of the decision and the press conference to follow, basically gold was up, stocks were up, yields were down. Probably not much of a surprise, although it is interesting to hear that when, the Fed's talking about a slower economy. This, I think the general takeaway was that the Fed is dovish, is the term. And so the stock market liked that essentially as a result. So again, gold up, stocks down, or sorry, gold up, stocks up, and yields down on the bond market. Be sure to tune in next week. Again, we're going to skip the question of the week here this time around, but next week we have consumer confidence, which apparently the Fed is watching very closely, and then home sales data as well. In the meantime, have a great upcoming weekend, and we'll see you next Thursday at 3.